Welcome to the Financial Quarterback with your host, Jim Lineweaver.
I'm Jim Lineweaver, your financial quarterback since 1993. The Biden administration has announced plans for a new $1.9 trillion COVID stimulus package. And here to help us understand what it means for you and the markets is LFG Tax Director, Mark Sipos. So thanks for coming on the show.
Thanks for having me, Jim. I think it's important to note that this has not yet become law. Although the Democrats are in control of Congress and the presidency, some version is likely to pass. And this bill has a lot to it, but we're going to focus on the top three, from stimulus payments to unemployment to help for small businesses.
Okay, so let's start with those additional supports for small business.
Well, most small businesses are now aware of the Paycheck Protection Program, but this bill is going to use $15 billion to create a new grant program. In addition, there's another $35 billion in state, local, and other lending programs to assist them with low interest loans.
So hopefully those would provide some stimulus to the businesses that really need it. There's also an additional stimulus for individuals as well.
That's right. The bill proposes another $1,400 in direct payments to taxpayers, in addition to the $600 that just came out recently.
I think the idea there is to get back up to that $2,000 level that they talked about in previous rounds. But besides being larger, there are also some other changes as well.
That's correct. They're going to include people that were previously excluded, such as adult dependents. And it also builds on the federal unemployment support as well.
Yeah, that enhanced unemployment would move the weekly benefit from $300 to $400 and also extend it through September, which is a big change from what they had passed in December, which only extended it through March.
And another big change that's largely not COVID related, but is in the bill as well, is kicking that minimum wage up on the federal level to $15 an hour. That could have big implications for small businesses, but so far the market has been favorable to all of these proposals.
Well, it does seem in some ways to be a double-edged sword. It's positive in the short term and will hopefully help forge optimism for further and broader economic recovery in the short to medium term. But what we're also seeing is an increase in treasuries as the markets assume that the U.S. will have to issue more debt to pay for all of these things. So going forward, we'll really have to keep an eye on the need for higher interest rates or tax hikes that could dampen the markets.
And maybe inflation as well, Jim.
Yeah, longer term, I'd agree that that's absolutely something that investors need to keep an eye on. For the short term, however, I think that's probably won't be much of a concern. But for all of these reasons, we've worked with our clients for the last few weeks to reposition, reallocate, and adjust their portfolios for 2021. So I recommend that everyone look at their investments in this light and make sure you're prepared for 2021. If you have any questions or just want a second opinion on your finances, give us a call. Mark and I will be happy to help. Here's Chris Wallace.